Good morning, traders. It is Tuesday, the 23rd of June, 2015, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A little bit of news overnight, nothing heavy. The Eurozone recovery remains on track with hope for room for upside surprises with Greece crisis fading. Some steps are still taking place to resolve this issue and keep Greece within the Eurozone, uh, driving much of the movement overnight. Major European June PMI manufacturing data beats expectations. There's a nearing of a deal to resolve the crisis in Greece that prompts traders to resume the euro carry trade, sending the euro US dollar pair to a 1 week low. The pair is trading at a dollar, $1.1180 in the futures. That's quite a bit of a drop from the 114 area it was trading in all of last week. Crackdown by the People's Bank of China on brokerage liquidity caused a volatile session overnight in the Asian markets. And then U.S. May durable goods orders came out at 7:30 Central today. Came in at negative 1.8% versus negative 1%, slightly worse. Durables export transportation came in in line at 0.5%. And then again this morning, Fed's Powell spoke, says the economy has seen a slowdown this year, partially due to the U.S. dollar strength, starting to see sign of wage increases in the labor market. Looking at what's ahead, we have U.S. manufacturing PMI at 8:45 Central this morning, just 15 minutes after the open, expecting 54.1. New home sales at 9 Central, looking for 525,000 and 1.6%. Richmond Fed manufacturing looking for 4. And then after the pit close at 3:35 p.m. Central, we're looking for the API crude oil inventories number. As far as speakers, we already had Fed's Powell. I don't see anyone else on here. And then there's at noon today, we have a $26 billion 2-year note auction in case you're in the curve. Let's have a look at what the markets have done. There we go. So yesterday, in yesterday's Trader Bite, if you had listened to it, the primary expectation is for the market for the ES to open to test lower into the 2113 quarter composite LVN area, potentially down to this 11.5, this formerly weak high. I talked about that there was a tremendous amount of support here. That hypo 2 is if we break through and start moving below the point of control of Friday, then we're looking at a 2097 retest again. That's the microcomposite point of control. But the main expectation, the trade that was expected yesterday, is for a test lower. It did push higher at the beginning, but we expected a test lower to 13 quarter, push through by 3 ticks here, and then we're looking for a rotation back to 2119 and a quarter, which is that old point of control. I could see it better in this chart. This old point of control. So this excess top or strong high was vulnerable now that we're back above the point of control of that day at 2113 and a quarter, and we're looking for a test of 19 quarter. And I did tweet out the key test area is 2122, and that happened to be the high of the day to the tick. I'll show you how I got that 2122. If we move back to the end of May, where these numbers come from, you'll see that we put in an excess high at 21.22 on this day when we left this 19 quarter behind. This is what I call a template day. Once we move higher here, we start to go back in time and look at what the market did the last time it was here. That is our most recent point of reference, and that point of reference shows 21.22 being the excess high put in that day, and that's where I got that from. And that's exactly the high that we show. Now, I've received several emails asking why their charts don't show 19 quarter, this naked point of control, why they don't show the 21.22, and I'm going to tell you that it's because your data feed is not equalizing your futures contract. When we roll over, you have to adjust all of the historical pricing to represent the current premium between the last contract and the current contract, which was like a drop of 7.75 points or something, so that the data is equalized to the current price. We have to match the current price, and so because futures have a premium that we carry over time, we have to adjust all of the prior data. That's why the high is no longer 21.32 or whatever it was before. It's 21.24. Because it was adjusted down to be represented in September prices or in the September premium, and that's the main issue here. So we accomplished our mission yesterday, 21.22, and then we turned down and we ended up with a neutral day on the day with a point of control back in line in value, and it looks like the low side of this is incomplete. The low side of the profile is incomplete. So we see a gradual taper up top, but we see a quick drop off on the downside. So to me, this looks like it's likely to be a fairly choppy day with a pretty good potential of a pull down lower of an attack of the overnight low, and for us to move back down to 21.13 quarter, and then I expect that we would move into 21.0975 to test this point of control and to retest this profile that remains naked. That's my primary expectation today. If we look at the overnight session, we would see that it was pretty a non-event. We have a very balanced profile. We have pretty good volume, 135,000 so far for the overnight session, but overall a very balanced profile with the market holding on to the lower end of the range. So I'm looking for this 21.14 that we see on the overnight low to be extended lower before or at the open, and I'm looking for it to move down to 21.09. As I said, as the primary hypothesis today. I think we're done on the upside temporarily. A quick look at the fundamentals chart. So this chart starts on the in the low area of 2011, August 19th of 2011. I'm tracking the 5 key sectors in the S&P from this date. I'm also tracking the New York Stock Exchange 52-week highs and lows. Green is highs, red is lows, and I'm tracking the Board of Trade put-call ratio. And you can see here with this turn up, 52-week highs are diverging from the 52 weeks lows. It looks pretty strong, and we're moving into this colored zone here, which is a statistical area where we often fall from, and we'll see how that turns out. But overall, this looks pretty healthy. So overall, the upside trend is fairly intact fundamentally on the SPX and given the underlying sectors. But temporarily, I think for the day session, we're looking for it to roll over today and test lower. I don't expect 21.2450 to be gone today. I think that we're making a lower high here from the 21.2450 down. I'm looking at this as a rejection of higher prices temporarily, and I'm looking for it to rotate down to 21.0975. Anyway, I'm going to keep it short and sweet today. Interesting action in the 10-year notes. Strong drop with yesterday with a gap down today, and they're just not getting off the lows in the notes, pretending higher yields. So interesting movement in there. But I leave you with those thoughts. I don't have much more to offer, and I don't want to ramble. So good luck today. Keep an eye on your risk, and I'll catch you tomorrow. Take care.